Good morning and welcome. Pick the Radio News Hour. Joe and Jason on this Tuesday. I hope it finds you well out there. Our toll-free number, 800-951-0592. The website at allamericangold.com. And, wow, I'll tell you what, it is going to be incredibly hot here. Be careful the next couple of – we're used to hot. But, 114, 115, anything over 112, you don't want to mess around. So I'm sure the golf courses will be very, very empty in the middle of the day if you want to have the heat stroke open. I used to do that. Too old to do it anymore. Can't do it. Yesterday I was walking out in the heat and had to call my wife, hey, come get me. I've had enough. So be careful out there. Speaking of being careful, we have some news to share. Some very large gold and silver precious metals companies going out of business. We've been warning about this. It's a tough market when you have markets that no longer make sense, that become heavily manipulated, and, let's just say that prices rising and falling, $100, $200 a day in gold, silver. Silver's had days where it's been up and down $7, $8. Just causes bad things to happen. We'll share those with you. I hope you're not affected by that. Of course, we warn you. We warn you. This is the place to do it if you're going to do it. And then, speaking of bad news, I guess my soccer watching is probably over for at least the next 4 years. The United States did not put in a very good performance yesterday and lost to Belgium. But, I'll admit it. I watched like 3 whole soccer games. That's more soccer than I've ever watched in my whole life combined. So, I don't know. Maybe there's something to it. We'll see. It was, it wasn't very good. Anyway, that's enough on that. The news today, the funeral in Iran continues to go on, but in the last 24 hours, not one, not two, but 3 ships came under attack in the Strait of Hormuz. One of them, a Qatari liquid natural gas shipment. Another was a Saudi crude tanker. And then now just a report of another, I don't know what it was, that says that they came under attack as well. They're saying that these tankers were struck by unknown aerial vehicles. Yes, the UAVs, the drones. Minor structural damage reported on these ships, so we'll see. So far, I haven't seen any response from the United States as of yet, but that, I guess, has, you know what, though, somewhat worried. I mean, oil's back above 70, right? It's not like, oh my gosh, right? Oil prices are up $10. It's up $1.69, so it is well contained. The big thing, here's what everyone's waiting for this week. It's really simple. They want to get these Fed minutes, and I don't know what else they're, and why I'm not really sure, right? Because what are they going to say, right? When the Fed met, the war, whatever you want to call it, we had just hit a timeout on Friday, and the Fed met Tuesday and Wednesday the next week. So what are they going to say? Yeah, the prices are too high. So, again, everybody just trying to figure out What is the central bank really going to do? Is Kevin Warsh really going to raise rates, or is it just a bunch of talk and this won't make any difference one way or the other? Because obviously things have changed significantly since then, but that will be right. That's the big thing when we look at what's happening in the markets this week when this comes out. I want to say it comes out today or tomorrow. And then we'll kind of get a direction. Otherwise, it's going to be pretty tame in the marketplace until, I don't know, they're going to try to pretend that it means something. But very quickly, Roslyn Capital, you may know that name. They were big advertisers on Fox. Of course, I've warned you a gajillion times. Never, ever, 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 ever buy gold and silver off of the television set. Unless you're okay getting ripped off. That's it. Now, some of these, gold guys, the guys that do like the infomercials, hey, if they're going to go out and collect some set, right, that, and of course, there's a lot of work involved in that. They're going to charge you a lot, right? But it's not really, you don't buy gold and silver off the TV for the investment. How's that, right? When we get back, I'm going to tell you what happened and how to avoid it when we get back. 800-951-0592, Patriot Radio News Hour here on this Tuesday. Quick look at the markets. The Dow down 260, the S&P down 52, the NASDAQ down 370. We got some news from China about chip development that may affect NVIDIA. The 10-year note 4.52 on the U.S. 10-year note. The 30-year note broke above 5%, 5.03 today. And again, it's getting so much harder to sell long-term debt, right? We were just, the longer the term, the bigger, I guess, the bribe you have to pay. Like I said, crude oil up a $1.65. Gold's down $15, 41.50. Silver's down $1.30 at $60.65. But we were talking before the break about Roslyn Capital, one of the big advertisers on Fox. They have filed for bankruptcy and essentially for liquidation. 617 customers are owed at least $60 million in undelivered orders and repurchase obligations. I mean, it's crazy. That's a crazy number. I mean, Jason and I, our best year in business, I don't know, maybe we did 20 million, something like that, in a year. These clowns owe people $60 million. According to their bankruptcy declaration, sales peaked at $150 million in 2021 and remained near $100 million even through 2025. According to the release, they supposedly, and I like how they use the word supposedly, sold rare or special coins at extremely high markups, 15 to 35%, with its high-pressure sales team generated gross margins of approximately 18 to 19% Oh, my gosh. I'll tell you that, honestly, I've never, ever, 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 ever in the some odd years I've been doing this, ever charged anybody 18% on anything, ever. Listen, it's pretty simple. Now, here's the thing. This is the funny part. That's their gross margin. That's not the margin they charge you. This is, right, when you look at this. But we're single digits. That's it. Always. Every time. Sometimes we get really low. The last year they turned a profit, according to the release, was 2021. The deficit has grown now to greater than $60 million. They say that Roslyn has no longer possesses any inventory of any kind. So if you are owed from Roslyn, you're not going to get a dime. That's what it looks like in this report. There is, I guess, nothing left. There's nothing to sell. So be careful out there, you guys. Be careful. There's going to be, this has been, and it's something, Jason and I, we've had these conversations with you guys. It's a really hard market. We knew companies would be going under. Gainesville Coins in Florida. They've been in business longer than we have. You think about Patriot, we've been in business 30 years. Gainesville's been in it longer than we have, and they haven't filed for bankruptcy yet. I use the word yet. Looks like they're going to. They are being sued by all kinds of people right now. So be vigilant, be careful. If you want to buy, call us. We're going to give you great deals. If you want to sell, call us. The best thing to do right now in this environment is to partner with us. And I say this because the market is so slow, and if you don't do that, if you're like, gosh, I got to have my money, I got to have it right now, you're going to get prices well below what we would want you to get. Like, I know Jason feels the same way. We hate it when you say that. We're like, oh, well, gosh, you know what? Hey, I can give you, $3,500, $3,600. That's not what we want to do. But that's just how this market is. If you're going to be selling, the best thing to do is sell well ahead of time and let us retail. I mean, look at, you guys know, we sell gold below spot all the time now, and usually that's people selling back to us. That's when we have those opportunities. But yeah, Jason, a lot of stress in all of this stuff, and it's really a microcosm, I think, of the entire economy, really. If you're not AI or data warehouse, right, it's something in that there's stress in business, and we're seeing this play out time and time again. And then I don't know if you guys are paying attention, but just in the last 24 hours or so, news breaking everywhere about what is going on in the markets. People now talking about how this is the worst overvaluation in the U.S. stock market, including the Great Depression, right? So we've had 4 different really bad overvaluation periods, right? We had the Great Depression. Started with banks behaving badly, and copper, of all things, believe it or not, kind of led to the whole thing falling apart. You had, the 87 crash, but was at the lower end. You had the bubble of the tech euphoria, right? Which was, that kind of was close to the Great Depression. Of course, remember, that's where we got 1%. Remember 1%? Alan Greenspan said that caused the housing panic, right? Well, the housing euphoria, right? Everybody, you went to bed every night, you woke up and you were worth another $1,000. You're like, man, this is great. People would line up in the desert here in Arizona. I'm not kidding you. They would come from other states, line up in the desert to plop money down on a development coming soon, right? They'd have a trailer. And inside the trailer, they would show you, they had a map. Here's the map, and here's all the houses, right? Which lot do you want? And if you wanted one of those bigger lots or a lot in a cul-de-sac, right? Oh, man, you could pay 20, 30, 40, 50,000 just for that lot. You wanted, that regular postage stamp lot, that still cost you 10 grand. And people lined up. And, of course, we know what happened back then. But then the next biggest overvaluation really had to do with what? The financial crisis. Right? And we saw the stock market went from 14,000 to just under 7,000. Lost over half of its value. And now, all of a sudden, everybody, and I mean everybody, how about the U.S. Treasury as an example? Now, they don't come out. Here's the sad part. Why wouldn't Scott Bessent come out on TV and just tell everybody, hey, America, I want to let you know, we've got these reports, right? And we do all kinds of research. And they're saying that this AI economy is entrenched more so than the dot-com predecessors, poses significant financial risk to the entire system. If, they say if, okay, that if should be a win. When financial conditions change, productivity goals are going to be missed. Various choke points are going to stymie growth. They concluded that the AI bubble popping would lead to an immediate crash that the U.S. economy experienced with the dot-coms in the early 2000s. But they're hoping that companies will cut back, that investors won't lose confidence. But essentially, they said, hey, by the way, we have to admit that another bubble has been created. And then picking up on that, by the way, all of these came out.
I might disagree with that, actually.
Well, again, I'm sure Jason would, right?
Well, usually I think that there's going to be a market crash. I'm starting to change my mind, but go ahead and finish, because I think we're looking at this thing wrong.
Last but not least, Bank of America saying get ready for the stock market. They're saying a snapback that will wipe out much or all of this year's gains as speculation is hitting extreme levels. So I don't know what's going on with the speculation side of things, right? Obviously, over the weekend, something has gone, we're sitting there, listen, look, Wall Street's at 52,800, the Dow's at 52.8. There's a lot of speculation, obviously, but it feels like, Jason, that maybe there's been even a bigger move into the speculative territory when it comes to Wall Street.
I'm starting to think there's not going to be such a thing as a big-time market crash. And if we do have one, it will reflect the COVID crash. It's funny how quiet, nobody ever wants to talk about that as a huge market crash. That wiped out how many companies? Now, Joe talked about for years that there's so many thousand banks, and then as years go on, there's less banks and less banks. Yep. And banking is an industry. It's like a lumber yard. If there was 20,000 lumber yards across the country, and as time goes on, there's only 10,000 and 5,000. Well, if you have like one huge company that has all the lumber, how do you crash it? The only reason you would crash the lumber industry is to kill the small guys that are left. Joe, I don't know if we can have a 50% market crash unless it bounces back like a rubber band like COVID.
800-951-0592, Patriot Radio News Hour. We're talking about this last 48 hours from the Treasury to Bank of America and others, all talking about the same thing about, okay, we've seen these movies before. We've got these valuations that just seem to be overly outrageous on top of a lot of speculation. And I will say, Jason makes some great points, but this is, I think, the reason, part of the reason why they're warning is a lot of, it always is. I don't think it can happen. But it can. Will it? That remains to be seen. I think as this plays out, the one thing that is pretty certain in my mind is there's going to be a lot less companies all over the world. There's going to be fewer and fewer publicly traded companies, right? Fewer stocks to pick from. Part of what we're seeing now probably has a lot to do with this, which is, well, gosh, there's just not that many publicly traded companies like there used to be. To Jason's point, we've been watching the consolidation of industry after industry after industry. And, I think the fear here may be some of these bigger players may end up being not big enough, right? And
right.
Are we going to see the fall? Not necessarily, because there's not that many small companies left, right? Are we going to see some big companies topple when this is all said and done?
That would cause a huge market crash, yeah. But, Joe, here's the thing. If you're going into a major market sell-off, who's buying it? For the price to go down, someone has to buy it at a lower price. And you have these massive companies, they'll sell off a position. I mean, look, even Warren Buffett was selling off a bunch, but he didn't sell everything. Even their big company just kept a large position in many stocks. The idea is when there's a market crash, hey, there's a value in these stocks, and I'm going to sell below the market. And then that guy gets it, and maybe he's like, uh-oh, wait a minute, I'm going to lose a whole bunch. I better hedge that and sell at a lower price. I want to lose less than the guy I'm going to shovel it off to. Who are they going to shovel it to? Right? And if you own the lumber market, you don't have to worry what the stock is. You own it. Right, Joe? So if there's no competition, there's nowhere to sell this stuff to. I think there could still be a market crash, and I still think it can be like the COVID crash. But that thing came back in 6 weeks. It went down in 6 weeks. It came back in 6 weeks. And that's just to shake out all the suckers. Right, Joe? Because there's not that many of them. I think the reason the COVID crash acted the way it did It's because there's nobody to buy it. You could shake out a few, but I mean, when a market crash happened in 1987, you probably had a good 60 to 70% of the market you could sell this stuff to, right? People that might buy it as it's going down. Who do you have to sell it to? What percent of the market might buy as it's going down? 10%? You better believe all the big players know that it's going to go down, right? They're going to hold majority positions no matter how hard it crashes. They're going to hold a majority position, and then whoever is unlucky enough to sell it as it's going down, those guys. Look at this. Look what happened with silver, Joe. Look what happened with silver. It went up to $121 midday. It had its all-time high of 116. And then what was it? A week later, 2 weeks later, a month, J.P. Morgan put that $72 price tag,
right,
and down it went. I mean, silver's a small market. Look how easy they did that. How much money did J.P. Morgan Chase make on their silver?
When you think about it, right, they took 50% out of the silver market in a matter of months. And, of course, we're sitting there talking about...
With the stock market going up the whole time.
Right? And think about this. With the stock market going up, AI, data warehouse, and let's not forget, dropping bombs.
Yep.
Everywhere. And, of course, electric vehicles, right? Tesla, right? They had a big resurgence, right? Gas got more expensive. Everyone's talking about the Chinese. Oh, my gosh. Canada and Mexico are going to let Chinese EVs come in. It's going to be the end of the U.S. auto market. Right? All of that requires huge amount of silver.
Yep.
And yet they got it to go down.
Yeah, they probably knew the price was not going to be held down anymore. It's like, well, where do we want to put it? Let's shove it right up the stairs, and then we'll knock it right back down to where we want it to be. I mean, Joe, I think the higher the stock market goes, it's an indication of the lower standard of living for everyone else. So I think the stock market is going to continue to go up. And is there a crash? Look, AI. There's going to be an AI stock crash. Why is that? Because there's actually competing big. This is how billionaires play their football game. They can't go on the football field and throw a touchdown pass, but they can jump into a new tech field and try to be the first one there, right? Is it going to be VHS or Beta, right? Well, VHS won. So there's going to be an AI Titleist. Maybe 2 or 3 companies get to survive the AI game, and all the other ones are going to shrink and die. Yeah, we'll get some market turbulence over that, Joe, because it's a big part of the NASDAQ. But overall, they're going to print, Joe. Look, if we didn't have inflation, if we didn't have inflation since the 1970s, the way it's been going, I think the Dow would be like 3,000 points. And everybody would be happy. No one would be worrying about market crashes. Maybe it'd be 5,000 or 6,000. I remember, I was a little kid, but I remember what was it? Nightline. They did their
was that Ted Koppel?
Yeah, at the on New Year's Eve, they did their New Year's Eve show, and they had the guys come on and make predictions of wars and geopolitics and. Well, one guy came on, I forget, 1980, whatever it is. I think the Dow might get to 2,000 this year. And that was like a big deal, right? And what they did is they looked at the predictions from the last year and give a big red X for the guys that missed and a big green check mark for the guys that were right. But the market, if it moved up a couple hundred points in a year, that was a good year for the stock market, for the Dow. But with inflation, and I know gold is more of an indication of inflation, but the stock market really only goes up because of inflation, because there's more money there to buy this stuff. So, Joe, there's going to be more money to buy this stuff. Most of these guys, they don't know where to put the money. They're not going to keep it savings for too long. They're going to buy stock. Overvaluation. It's all sparked by your overvaluation, right? Is it really overvalued if a trillionaire can back up that company? Is it overvalued, Joe? I don't know.
I think we're going to find out.
Yeah, we're going to find out.
We'll be back after the break. Kind of interesting debate. And I want to point out that when we look at the price for gold and silver, which one of us, and I'm talking about Jason and I, and of course I guess I'm telling you what these guys are saying, right? This is what the Treasury Department just said. This is what Bank of America just said. Which one do you want to be right? Do you want the Treasury Department to be right? Or do you want Jason to be right? And I think my answer is going to surprise you. Because what gold and silver really want is for Jason to be right. When you think about what gold and silver have done in the last few years, right? What was Wall Street doing? Wall Street was on a huge rally. And I know what some of you are saying, but right now, look at Joe. The Wall Street's still rallying, and gold and silver are down. Well, now listen, you got to follow the nonsense, for lack of a better word. Why have gold and silver come down this year? The answer is pretty simple, right? What's the answer? Oh, everything's overvalued. The Fed is going to raise rates, and the AI, probably can't deliver on all of these promises. And so and we always talk about the gold and silver are early indicators. They're going to tell you what's coming. I believe that the amount of spending, you guys, you're going to be shocked at it. Are we going to have sell-offs in this market? Yes. Mm-hmm. Are some of these big high flyers going to get clipped? Yup. Is it going to stop the rally? No. Matter of fact, don't be surprised. This should not surprise you at all. We will probably see $130 silver next year because that's how much they are going to print and how bad the supply-demand fundamentals really are. I mean, look at gold yesterday, right? By all practical accounts, well, we got the report yesterday, but May was like the real bad month for gold. It was terrible. Right? You got dropped $800, $900, something like that. Then why in the world did the central banks buy the most amount of gold that they've bought this year in the month of May? If it was so terrible, if it was so awful.
Well, if your budget is a certain amount of currency every month for your gold, then you can buy more when it's down. And that's why you buy more, right? It's a buying opportunity.
It's a buying opportunity. And I think this is what the people, at least in the United States right now, are missing, right? They're missing the buying opportunity because I think, Jason, there's this belief, right? Okay, we're going to have, right, the big market crash is coming. And, of course, all of us remember, right, when the financial crisis struck, what did gold do? Gold went down. Silver went down. Now, it rallied to new highs after they were like, oh, well, what are the bankers going to do? Oh, they're going to print money. Oh, okay, all right, here comes the rally. Guys, the rally is coming. And I told you when I started this show, what are they all waiting for? This stupid Fed minutes from a Fed meeting that truly has no comparison to what the world is today. And it was only 2 weeks ago. That meeting was 2 weeks ago. I think, well, maybe 4 weeks ago, 3 weeks ago. I can't remember. 3 weeks ago. We had another meeting coming at the end of the month. And they keep trying to convince everybody that we're going to be tough and we're going to raise rates and we're going to snuff this out. No, they're not. Guys, They are going to print money at levels that we've never seen. And guess what? Any crash, any hiccup, you will immediately hear the government say, oh my God, we got to come up with rescue packages, and oh my gosh, we got to cut taxes, we got to do this, and we got to, all the nonsense that they do. Right now, the government is spending like we are in crisis mode. The government is spending like we're in crisis mode. Wait till you see what they do when it's actually a crisis. It's going to be off the charts. I hope you get your medals today. I do. 800-951-0592. Patriot Radio News Hour. Final segment coming up. 800-951-0592. When have you ever seen, let me ask you this. Take silver. Silver's probably the best example. It's lost 50%. And yet, there has been zero, none collapse in any underlying demand. Right? And we could talk the same about gold. If anything, they're buying more of it. But yet the paper markets say that the price is down. Guys, this thing's going to snap back because they haven't figured out yet. I've been telling you, how long have I said since Kevin Wars first made his comments of his big tough talk? It's just that. They are going to print the daylights out of the money. Today, $28 gold pieces, $42.50. Right? We got, gold at $41.40, so $110 over. Buy 10 or more, $42.25. Silver, U.S. Silver Eagles today, $14.25. If you buy a case of Silver Eagles, take another $5 off, $14.20 a roll. That puts the case, right, $35,500. Tell you what, No, $14.15 on Silver Eagles. You buy a case or more, take another $5 off. That's $35,250, saving $500 a case. $500 on the case today. And here's the thing. I promise you, we are not charging you up to 35%. It's paying 18 and 19% on your purchases. This is, as you guys know, to be in business as long as we've had, we are resourceful. We operate on very low spreads, but we want to get you the best deal possible. And again, I don't want to say the markets are lying to you.
But they are.
Get it. But
I'll say it.
But he said this.
Yeah.
Yeah, okay. I know what they're saying, but what are they doing? Right? What are they doing? I'll tell you what the Treasury's doing. They're buying Treasury bonds and trying not to tell anybody.
Yeah.
Right?
I think I'm in real time. I'm trying to think about these things when we're talking on the air, and I think I can provide some good theories here as to why the markets will just keep going up, and if we have a crash, it'll be a flash crash, right? And I think it is going to be around this presidential election, which we got more than 2 years away on this thing, and I think some of the things are going to be a little shocking. I think liberals invest better. with what's going on in my brain, I'm starting to understand this a little. I've never been a stock market guy, so until the last couple of years, especially since COVID, I haven't had to really look at it that closely because I just stay out of it. I'm not a stock guy. But Joe, we'll talk a little communism, how that probably prevents market crashes for the most part.
Boy, I can't wait for that. 800-951-0592.